Hi, a very good morning to all of you. This is Aaron Bhaskar from BKBB, an acronym for Bhaskar Ki Business Baatein. This is a channel that comes to you with policy analysis, conversations, and an occasional business story. But right now at 8:15 in the morning, we bring to you news behind the news. And today my co-anchors are Hussaina. Welcome, Hussaina. There's Sanjay. Welcome, Sanjay. Saloni, welcome to you too. And Janavi, welcome to you. All of them are going to discuss some very interesting stories, and they're given on the screen before you. The first story will be: Is Asia facing deflationary pressures? The second is about Russian oil and how it continues to fuel India. The third is about how snacks is still a favorite, not only of consumers, but also companies. And the fourth one is on Medicare, where nobody's happy. Not the policyholders, not the insurance companies, not the hospitals. So what's wrong? And let's begin with the first story: Is Asia facing deflationary pressures? And Hussaina, could we have you?
Yes. So, after battling persistent inflation since the pandemic, many Asian economies, India included, are now facing a very different problem, which is of disinflation. Now, disinflation, to put it in simple words, is a sustained slowdown in price growth. And across Asia, countries like South Korea, Thailand, the Philippines, and Malaysia are seeing inflation drop below their central bank targets. In India, inflation has also slipped to a lower end of the RBI's 2 to 6% target range in 2025. Now, that is a very significant shift after years of high prices. So, what is behind this disinflation wave? Weak demand, low global food and commodity prices, but most crucially, China. China's slowdown is rippling across global supply chains. It accounts for almost 30% of global manufacturing. So, when its producer price index, which is basically the price of goods out of factories, falls, it pushes down prices globally. And India's wholesale price index, WPI, is tracking this fall closely. For India, this imported deflation is both a risk and an opportunity because, again, it helps cool inflation domestically, but at the end of the day, it also points to sluggish demand, which is at the global level. There is also a local factor at play. So, we recently have the GST rate cuts. From cement to household items, these cuts are expected to help keep retail inflation low for at least a year. Now, with inflation low and the US Fed expected to cut rates soon, the RBI might also ease interest rates to stimulate growth. And if the US Fed slashes rates by 25 basis points this month, that opens a window for India to follow suit. Now, the thing is, sir, is that even if low inflation is good for us and for your wallet, too low can signal economic stagnation. And as a result, why disinflation needs to be monitored carefully so it doesn't spiral into deflation where falling prices harm business investments and jobs. The question about how India is faring, well, cautiously well. Prices are in control, but demand side weaknesses and global linkages, especially with country like China, mean that the RBI will have to tread it carefully. What do you think, sir? Do you think that the recent GST cuts will exert a downward pull?
Well, what you point out, Hussain, is very interesting, except that I'd keep my fingers crossed for two reasons. One, disinflation in India, it can be illusory. If you look at consumer product inflation, if you look at food inflation, if you look at cosmetics inflation, that's substantial. So, at one level, consumers are paying a higher price. At another level, when you look at the major indices of infrastructure, etc., you find that prices are coming down. That's one problem. The second problem is oil. Oil, which is a driver of all industries across the world, has also been coming down. Maybe oil prices go up, things will change. At the moment, it's too early to say because demand uptick in Asia is still there. China's exports are still vibrant, even though there's a slowdown in China. Europe is in decline. I would even think that some of the countries are in terminal decline. And Europe, and as far as US is concerned, which used to be the driver of global markets, it's losing relevance rapidly. So let's see what happens. But thank you. It was a very interesting summary of what's happening across this part of the world. Thanks. And that takes me to the second story on Russian oil. Sanjay, could you come in?
India's oil story in September shows how deeply energy security is tied to global politics. Despite mounting pressure from the United States, India has kept its Russian crude imports steady and even slightly higher than in previous months. Tanker data suggests that Indian refiners are still bringing in over 1.7 million barrels per day, a sign that Moscow's discounted crude remains too valuable to give up. And for a country like India, which depends heavily on energy imports, affordability and stability often take precedence over political noise. What makes this more interesting is the timing. Oil shipments arriving now were booked weeks ago, well before Washington sharpened its criticism of India's Russian deals. This means that the real test lies ahead. The contracts signed in late August and September, which will decide whether US pressure has a lasting impact. Still, the current number sends a clear message. India is not rushing to alter its strategy. Behind these figures is even a bigger story of pragmatism. Energy is the backbone of India's growing economy, and every decision has to balance cost, supply security, and international relationships. Buying cheaper Russian oil has allowed India to keep inflation in check and ensures stable fuel supplies for its citizens. At the same time, India maintains that it follows global rules and avoids anything that directly breaches sanctions. In many ways, this episode highlights India's effort to walk a fine line, cooperating with Western partners on one hand, while also securing its own national interests on the other. The resilience of the Russian oil imports in September suggests that, for now, economic practicality continues to guide India's choices more than political pressure. What do you think, sir?
I agree with you. India has to worry about its own requirements and not worry about what the pressures from America might be. America can be a disruptor, but India has more security in keeping oil supplies from Russia coming on without any interruption. What course it'll take in the future, one doesn't know, because Russia and other OPEC members have already decided to to increase production and thus keep the oil prices low. Let's see what happens. But interesting times. Thank you. Thanks, Sanjay. And that takes me to the third story, and that's where Saloni on how snacks are tempting everybody, including companies. Saloni, come in.
Over a dozen firms, including leading private equity firms, are competing to acquire a 10 to 15% stake in Balaji Wafers, where the promoters are reducing their stake. Recently, the investment company Temasek acquired a 10% stake in Haldiram, along with the private equity firm TPG and ADIA, which is Abu Dhabi Investment Authority, and some 10 other venture capital and private equity names. Private equity firms, including Temasek, are in discussion with the promoters to acquire a minority stake in Balaji Wafers. Balaji Wafers has a strong presence in the chips, namkeen, and confectionery products in central and western India. Besides fast moving consumer goods FMCG companies, ITC Foods is also in the race to acquire a stake in Gujarat based Balaji Wafers. Sir, sources say that the company's valuation is around 3.5 to $4 billion, but the promoters are expecting around $5 billion in valuation. ITC Foods, which is a part of multi conglomerate ITC, could be the likely suitor. So, if we look at the previous data, according to agencies, the company, which has 65 plus product stock keeping units and nearly 1,300 dealers, had crossed rupees 5,000 crore in revenue in 2023. According to reports, in financial year 2024, Balaji Wafers revenue was rupees 5,454 crore, and it reported a profit of rupees 579 crore. What do you think, sir?
Point out only confirms the market trend that everyone wants snacks. And in spite of a consumer slowdown, snacks are doing very well in the market. It may be unhealthy, but it is tasty. And that goes to companies as well. And that is why you have ITC and others, Temasek, all interested in snack companies in India. Thank you. Very interesting piece of news. And that takes me to the last part of this, our last story, and that's a Jahnavi on how nobody's happy. Jahnavi, come in.
So, so India's healthcare sector is once again caught in a tug of war, and this time it's between private hospitals and insurance companies, and the ones paying the price are the policy holders as well. The flashpoint came last month when Niva Bupa suspended cashless services at Max hospitals over reimbursement disputes. And soon after, Bajaj Alliance and Care Health also followed suit with other major hospitals. So the message is clear. Hospitals say that insurance reimbursements don't keep pace with the reality of the soaring medical inflation, while insurers argue that hospitals are inflating bills with hidden and administrative charges. Insurers say that for every 100 rupees collected, over 40 goes into distribution and admin costs, leaving very little for actual care. Medical inflation, estimated by insurers at 14 to 15%, is only adding to the crunch. So hospitals, on the other hand, argue that the costs of treatment and salaries are surging far faster than what insurers acknowledge. The numbers the numbers tell us that, for example, a heart transplant that used to cost 30 lakh rupees up till 2023 is now at 34 lakhs. A cardiac bypass in India costs 5,000 to $6,000, making it the third cheapest globally. But within a 10 to 15-year gestation period, for healthcare infrastructure, new investments are going to be hard to recover. Meanwhile, patients are left stranded in the crossfire. When cashless facilities are pulled, people are forced to pay upfront, which defeats the very purpose of health insurance. And despite paying higher premiums, customers still find themselves fighting over exclusions and out of pocket costs and claim rejections. So, India's healthcare costs are rising faster than incomes. Per capita income remains under $3,000, but medical bills are climbing to really high levels. And without serious reform in the pricing, transparency, and capital investment and insurance models, the average Indian family will remain one medical emergency away from financial ruin. So, what's your take on that, sir?
Jahnavi, you're saying the right thing. The average consumer is caught. He is caught between high price on one side and the inability of insurance companies to guarantee full reimbursement because hospitals are actually inflating bills. What's the solution? Well, a lot has to do with the government. The government has to first create more doctors. To create more doctors at reasonable cost, it has to increase the number of seats in government hospitals. But then politicians run private medical colleges. They don't want that to happen. The government needs to take a political stand on it. Otherwise, you'll have this mess continuing, and healthcare will remain just a mirage for most people. And that takes me to the end of today's session. Thank you, Janvi. And before I go on to comments, and we won't have much time for comments because we've already exceeded the time, but before I go ahead, please let me give you the usual reminder. Do click the subscribe button. Do click the like button. It helps us. And tell your friends about us. It helps us increase our viewership faster. And since there's little time, let me take only one of the comments that has come in, and that is, what is the solution for India as far as healthcare is concerned? The solution is better administration. The solution is better education. The solution is more expenditure for medical colleges. And the solution is that insurance companies need to be empowered to make sure that hospitals don't lose customers. I have Known cases where a person is admitted to the hospital and the consumption of medicines is larger than what is actually consumed. I've looked at cases where consumables is one area where hospitals overcharge, besides doctors' fees and whatnot. And doctors' fees are high because education is not there, because not enough doctors are there. Everything falls in the government's lap, and this is one area, if the government does not do anything, India is going to be in big trouble. Well, I'm not going to take up any more comments. Please forgive me today because we have exceeded our time slot. But yes, do log in tomorrow and have a wonderful day today. I look forward to talking to you again. Bye and good luck.